Today, let's dive into a fun topic about exponential versus polynomial growth. I feel that many people don't really understand the differentiation between exponential and polynomial growth. These are kind of completely different beasts, and but on the surface level, they often look similarly, and it's difficult for many people to differentiate between exponential and polynomial growth. And as investors, as people, as like tech enthusiasts who want to be on the right side of change, we need to understand the differentiation. It has a significant impact into all areas of life. It also impacts biology, physics, and stuff. But we will focus like more on the financial aspects and artificial intelligence in particular. And we will have many practical examples at the end of this presentation. So stay tuned. Watch through the whole presentation. If you already know like the background of exponential versus polynomial very well, then you can skip the first few slides, but I would recommend you just go through it with us. Okay, so let's get started right away. Here we see how exponential growth is much faster than polynomial growth. It like supersedes polynomial growth. And in these two charts, I gave two functions. The blue function is exponential growth function, 2 to the power of x. And the orange chart is the polynomial growth function, x to the power of 3. So initially, the slope of the growth in the orange line is much faster, right? So initially, it looks like polynomial growth is actually outperforming exponential growth, because like in the beginning, exponential growth often seems slow. And here with polynomial growth, we started with a growth rate of 40%, but then of course the growth rate reduces, as we will see in a minute. And you can see like here on the left we have the function 2 to the power of x, and finally at a future point in time, the exponential growth will reach or supersede the polynomial growth. So it always dominates given enough time, and if the exponential growth sustains. And here on the right picture, we actually see the 10 to the power of minus 4, 10 to the power of minus 2, and so we see the y-axis actually on a logarithmic scale. So this is the only thing we changed. Here we have a like linear scale and the linear scale on the x and the y-axis, and on the right we have a linear scale on the x-axis, but a logarithmic scale on the y-axis. So we multiply. So each step here is a multiplication with 100, right? So we have 100x here, 100x here, 100x here, and you see initially we have very fast growth with the polynomial growth curve. And it's even faster than it quickly supersedes the exponential growth curve in the beginning, but then of course eventually the exponential growth catches up. And you see also a very important distinction here, that exponential growth in the linear log space, so we have linear on one axis and x-axis and log on the y-axis, is actually a straight line. So exponential growth can be easily seen as like being a straight line, which means that, like, let's say in 2 units of time in this plot, we have a 10x increase of value. And then again, in 2 units of time, we have a 10x increase. 2 units of time, 10x increase. So this is an example of an exponential curve. So we double our value, could be now the dollar value or anything, right? The metric you want to measure with a fixed unit of time passing. We have a doubling or a 10x or something, an order of magnitude increase in the value we are measuring. And this is not the case for polynomial growth, right? It is like it is varying here. So here we move 1 unit to the right, and we get like 1000x or so increase. But then we move one more unit to the right, and we get only say a 5x. And then we move 1 unit again, we only get a 3x. 1 unit again, maybe a 2x or something, right? So the growth actually declines over time. And this is one differentiation that is really important to understand. With exponential growth, we have the same growth rate over time. The growth rate remains the same, and we will see in a minute Actually, I gave it here. So polynomial versus exponential growth rates here on the orange line again is the polynomial growth rate, and the blue line is the exponential growth rate. So this one is the same chart, but it just measures the growth rate. And you see the polynomial growth rate is always declining. That's why, so it's polynomial in time. The growth rate declines over time. And even if in the beginning the growth rate might be much higher than exponential growth rate, as it is declining, eventually it goes below the exponential growth rate that maintains the same small growth rate over time. And in this example, oh, actually no, this is another. So we measured. Oh no, this is actually this. Okay, so you see eventually. So in this chart, we see that the growth rate here was really small, right? It's only 5% or so. But eventually the polynomial growth rate drops below 5%. Okay, so I think this you understood, right? That exponential growth rate, and we have an exponential if the growth rate is constant. So for instance, inflation would be exponential growth, the debasement of the currency. The goal of the Fed, for instance, is 2% inflation rate, and it sounds like a small growth, right? But it is a constant growth rate that remains steady year after year after year. And with a constant growth rate, we basically obtain an exponential of the underlying we are measuring. And this means that we have an exponentially increasing inflation. And as we see in this talk, this is really dangerous because exponentials are fragile. They often break systems, they are disruptive. So even with a small constant growth rate, like the constant 2% inflation rate, we get a fragile system over the decades, right? It becomes more and more fragile, and eventually it must break mathematically. Yeah, I think this one you already got. Sustained exponentials always beat other growth rates. For instance, here we have like a linear growth, like f, the function f grows linearly in the value x we put into the function, and so we have f of x is 50 times x. So 50 times x, the red line here, it has a linear growth. Now the axis is not logarithmic anymore. Here the blue line has cubic growth, so x to the power of 3, and here we have exponential growth, 2 to the power of x, and you see it outperforms everything. Okay, and now this slide is really important for the rest of this talk, because it visualizes growth in 3 different scales, right? So we can plot our functions like exponential growth or polynomial growth. We can plot it in the normal linear space. So usually on x you would plot something like the years, right? And on an y-axis you would plot, say, the investment value, for instance, of the Nvidia stock or so. And then you would kind of get a function that just goes up into the right in the best case, right? If you have a growing business, it would go up into the right, and it would look something like this. But our eyes are really bad in identifying what kind of beasts we are looking at. Are we looking at a polynomial growth function, or are we looking at an exponential growth rate, or even something faster than exponential growth or slower than polynomial growth? Because these are not the only 2 kind of growth categories, but the most common ones. And as everything debases with the currency, so if you have a 2% debasement of our currency or inflation rate, or even say more realistically 10% debasement and 2% inflation rate, then of course everything, all asset values, all asset prices, not values, all prices of all assets grow exponentially, like on average, right? Why is that? Because the asset value, in order to remain constant, in order to remain the same over time, it needs to grow exponentially. So it needs to maintain a constant growth rate that is at least the debasement rate, right? So it should grow by at least, say, 10% in order to maintain its value. And if it grows by 10%, then it's already growing exponentially. That's why many stocks, like the S&P 500 and so, it looks like an exponential growth curve, but it's really just a debasement, just keeping up with the monetary inflation. So if you have one exponential in our system, then it will often come to dominate our system. This is a very important observation. Okay, but look, and we will see this in later in the talk when we're talking about AI and different real-world exponentials that we can observe. Okay, but let's have a look at these scales. So we can plot things in the normal linear space. So both the x-axis and the y-axis are linear. So we have for each tick in the x-axis we have a like constant increase of the value, and for both axes, right? And here we can see it's difficult to differentiate between an exponential and a polynomial, exponential in blue. But if you now take the y-axis on a log scale, so for each tick we have a 100x increase of the value, this basically would make the blue function, the exponential function, a straight line, right? Because for each, as we already saw, for each, say, moving 1 unit to the right, we get a constant percentage increase. Or maybe, so here for this example, we can see for each 2 units we go to the right, we get like a 10x. And for each 4 units, so moving 4 units into the right constantly, so four ticks into the right on the x-axis, we get a 100x increase, even more than 100x increase, right? So from 10 to the power of 0 to 10 to the power of 2 is like a 100x difference. And then if we move 4 units to the right again, we again have a 100x increase. So we have a straight line in the log linear scale. And this is really important because now if you take the log of a plot, and you can often do this with charts, right? You can take the NVIDIA chart or the Tesla chart and click log. In fact, let's do this, right? Let's have maybe a Yahoo Finance or so chart of Tesla. Okay, so here we have the chart. Computer is a bit slow today. And let's expand the chart so we can really do some charting analytics and okay, now we need to be able to, here you see y-axis scale, we can select logarithmic, and now we get actually a log linear plot, right? And we see it like if you take the last 5 years, we can see that NVIDIA, Tesla has not really growing, like has not seen an exponential growth or so. It was like kind of a bumpy growth, right? But maybe if we could even average this out. We could now like generate different figures, because an exponentially would be now a straight line going from here. Okay, I cannot draw into this. Okay, it would be a straight line going from here up to the right, right? So it basically looks even better than a straight line. If we would draw the straight line from here to here, we would go to maybe 21 or so, right? So, but it has even grown faster than a straight line, but it doesn't look like a textbook exponential, right? But we could measure things in this way. Okay, let's go back to the presentation, arguing from first principles. Now we have seen if in the log linear scale we can easily see if something is an exponential or a polynomial, right? And the polynomial would look something like this. So we have declining growth rates. We have something that grows slower than the straight line. And the straight line can be easily identified by the human eye. So a straight line would indicate this is exponential growth. If we look at the, if we now take a log of the x scale as well, and this is very uncommon. So this first one would be very common, but looking at the log scale, especially if the x-axis is the time axis, it is very uncommon to do this. So there's basically only one example I know where we have a log scale and the x-axis remains the time axis. And we will look at this example as well in a minute. Okay, so in the log scale, you see now the polynomial growth becomes a straight line, whereas the exponential growth grows faster than a straight line. So the growth rate of the exponential curve, the blue one, is faster than this orange one or brown one. So we have in the log scale, a straight line would mean we have a polynomial or a power law. And this is often like, often a power law can be identified with this line in the log scale. Okay, so let's have a like some general outlook, right? Or let's maybe have a bit more a general view and diving into specific examples. Things that grow exponentially in time are often disruptive in nature and unsustainable. Unsustainable in a way that they cannot grow exponentially forever because it would break the system. And the system often, nature often doesn't allow us to maintain exponentials forever. And this is important for chip technology, as we will see in a minute. And for instance, Moore's law and Jensen's law. And things that grow polynomially, such as like power law growth, is often evolutionary and sustainable. And it can sustain decades or even centuries. So polynomial growth is very sustainable. It doesn't break the system in many ways, and only gradually and evolutionary, right? So we have disruption is exponential growth, and evolution is polynomial growth. And examples here are in like biological organisms is an example for polynomial growth, not exponential growth in many cases, and they are sustainable. And networks such as like Facebook network or even Bitcoin monetary networks often have polynomial growth. So they follow power laws. In Bitcoin, we can see an example here. Oh no, actually the example comes in a minute. Okay, so here is an example of Bitcoin. Here we have a log plot. Yeah, so we have the price of Bitcoin in the y-axis and the time in the x-axis, and you see both are logarithmic. So we get this like each unit of time becomes like each tick gets closer to the previous tip for each subsequent tick. So this basically on the x-axis shows you that the years progress faster and faster in this plot, right? So we have on the x-axis we have a logarithm, on the y-axis we have a logarithm as well. So each tick is like a 10x in increase of value, increase of Bitcoin price, and you see that our eye sees a line in this log space, right? So if you have a log plot and we see a straight line, then we immediately know it's polynomial growth. It's not exponential growth. But many people basically believe Bitcoin follows an exponential growth trajectory, but it doesn't really. It doesn't, like currently it is dominated by this polynomial power law growth trajectory. And the growth rates are still very high in the beginning. They are like, currently we are at a 40% growth trajectory or so. And as I said, if we see power law growth or polynomial growth, then often we can trust it more than exponential growth. At least it can be like, it can gradually change the system, and the system can adapt to it, maybe to a new monetary standard. It can actually adapt to it, whereas an exponential figure will often break things. It will, like in Moore's law, we have seen how many businesses have been broken by Moore's law, by the rise of the internet and so on. And here this once more power law versus exponential. Here we have a power law. One is like a 5% growth rate. It looks, initially it might look that the exponential growth is much faster, even if you have only, say, an inflation rate of 5% or so, or debasement rate, whatever you want. And you have a like power law t to the power of 1.5. It initially grows much faster. But if you zoom out more, like zoom out to the 200-year chart, you see how the exponential eventually dominates the system. Now it's prices, the system would be prices of financial assets, for instance. Eventually it would be dominated by the exponential growth curves we have. And printing arbitrary number of monetary units would, for instance, now result in an exponential growth of asset prices, of all kinds of asset prices. And all charts would look like this eventually. And okay, and here you see like the exponent of this power law would be t to the power of 6. So this line would grow t to the power of 6, which means that for each passing, say, so Bitcoin's age is now 15 years. If we double, if you have a 2x in the number of years passed, 2x would result in 2 to the power of 6, or what is it? 64x in price. So we would see a Bitcoin price from roughly 70k to a Bitcoin price of what is like 70k times 70k, 70,000 times 64 would be like a $4 million Bitcoin price or so. This would be predicted by this power law model. And yeah, I mean, you can make of it whatever you want. It's just interesting to see, like in this plot, this model, this is a real-time application of the power law of something that would be a sustainable growth trajectory, right? For because it doesn't grow as fast as exponential. Bitcoin is not growing exponentially in price and time. It is growing polynomially, as we can see from this chart. Like you see the straight line currently. And as the growth rate declines, because it is a polynomial growth rate, the growth rate actually declines. We have also seen this figure here. So initially the growth might be fast, for instance, of Bitcoin, but the growth rate declines, and eventually we will see how it declines below the exponential growth rate, and the exponential will catch up. And that's why eventually all models break to the upside, because we have this exponential trend, underlying trend, which is the debasement of the currency. So all models will eventually break, and we will see an exponential increase of prices of all kind of major assets that actually sustain or survive. Okay, so let's have a look at an exponential growth rate. And this is maybe more interesting for many people concerning AI and chip technology. And if you have exponential growth, it is much more fragile, and it puts much more stress on a system. Because now you see, for instance, the most disruptive trend of our time, which was Moore's law, right? And you see in blue, the dots, it's like the trillions of operations per second over the years. And we see maybe per unit of cost or so, and we see we have had this straight line in increase, a straight line in the log linear space. So let's have a look at our initial figure. We now have a log linear scale and a straight line. It is an exponential growth curve. So if you have a line for some time, say the first few years here, it looked like a line. It looked like a line in the first few years, so people were actually expecting an exponential growth of the number of operations per second of Moore's law. Now Moore's law has kind of faded out, right? As I said, exponentials are really hard to sustain. Eventually, exponentials will stop working. But what has happened is we have seen in the year, say 2010, we have seen the rise of a new technological platform, so which has changed the paradigm. And it was GPU computing, and each paradigm shift can actually, so this is our human capability to learn and to develop new technologies, and this can actually be the game changer that keeps us on an exponential trend longer than the trend can sustain by itself. So for instance, this Moore's law ran against the limits of physics, right? So we could just not put more computation on single chips due to the limits of physics. But we could still invent new ways or circumvent the problem, find new ways to accelerate computing with completely new technologies, maybe not focusing too much on what to cram on a single chip, but maybe focusing more on parallelizing or finding new computational paradigms, right? So that we can maintain a trend longer than we expected. And basically it was NVIDIA, like in 2010, that invented this chart. This chart also comes from NVIDIA, that invented GPU computing, general purpose GPU, and applied it to AI. And we have seen a 1000x of compute efficiency in 10 years. So this is like the exponential, the line in the log linear space could be maintained and even accelerated. So you see, if the slope of the line is larger than actually the exponential increase accelerates at a larger pace. And we can see this. Here's another graphic from our world in data concerning the number of operations used to train different AI systems. We know, like DALL-E, GPT-3, Palm, and so on. And you can see from the 1950s to the 2020s. And we can see that in the year 2010, the slope of our line, of the number of operations used to train our models, has accelerated. And this was about the same year where NVIDIA invented GPU processing. So they so this company alone actually put us on a growth trajectory in AI that could only be maintained due to the invention of GPU processing. And interestingly, and this was in the year 2010, interestingly, Ray Kurzweil, in his book, The Singularity is Near, predicted like in the year 2000 already that we will maintain this growth rate. And basically he was, in my opinion, overly bullish, because if you look at this plot here, again, let's look at it from our framework. It is a log linear plot, right? So we have on the x-axis we have a linear axis, on the y-axis we have a logarithmic axis. So going up here actually increases our calculations per second per $1,000 by like orders of magnitude, right here by 10 to the power of 20 to 10 to the power of 25. So this one step is like a 10,000x in increase. And so we have 10,000 times that many calculations per second. And you see, like one human brain can perform 10 to the power of 15 calculations for $1,000. And all human brains together, it must be like a billion x, right? That many calculations. So we have 10 to the power of 15 to 10 to the power of 25, which is like a 10 to the power of 10 difference. So we have a 10 billion actually difference in the number of calculations it can all human brains collectively can perform. And you can see how the slope, how we don't have a line in the log linear plot. If we had a line, then we would see exponential increase. But Ray Kurzweil predicted an increase that is faster than exponential growth, that is faster than a line in the log linear space. And interestingly, in the year 2010, we have seen this one happening, right? This one data point where we went from a like exponential increase in the number of operations per second, and we accelerated this. Like the slope accelerated. It didn't fade out as like this technology faded out, but we invented a new technology that was accelerating even faster than before. So if we put many of those technological breakthroughs like against each other and after each other, then we might even see a super exponential increase. But like even an exponential increase would be disruptive, but a super exponential increase is like exponentially disruptive, right? So it's like completely mind-blowing. And soon we will reach the calculations per second per $1,000 that is beyond all human brains. So for $1,000 you can access computations that is more powerful than all of humanity's computations per second. So this would be like insane, right? Insane levels of performance. And this is what he talks about singularity. And actually, I think, again, he's like overly bullish. I'm not even as bullish, but I think like even if you had a line in this space, it would be extremely disruptive. And there are some side effects, right? Secondary side effects of these exponential trends. Here we see from 2010 to 2017, we see how the best AI system went from like 70% accuracy to 95% accuracy for a task like object detection. And the human baseline is like 94%, or maybe I did the number wrong. Maybe the human baseline is 95% accuracy, and the best AI system went to 98% accuracy. So it outperformed human object detection. And if this happens, if a computing system outperforms a human system, then of course we will use computers for the task, and the task will never be done by humans ever again, right? And this was the same for initially when we invented computers. Before we invented computers, we actually had people computing stuff. So on pieces of paper, they computed things. But then computers became much better, so they took over the computing, and it changed our world. And the same is happening now, not only for a few tasks, but for all tasks we are currently doing as humans. Not only for one task like computing or one task like driving, but all human tasks are on this on this slope. So we have a baseline human performance in red for all things: object detection, driving, writing, drawing, art, movie creation, I don't know, investing, all different kind of tasks. We have a baseline human performance, and the best AI system will outperform baseline human performance in all tasks eventually, because of these kind of exponential trends of these 1000x's in 10 years. 1000x from here will be completely disruptive. Already we see many AI systems outperform humans, but if you have even a 1000x cost decline, it will change everything. And it will break everything. It will break all models in our head. We should not continue today as we are doing today. We should not expect that our work will save us, our labor will save us in any way, shape or form. It's completely, we should now stop everything we are doing. And I try to inject this into Finxter's brain. That's why I do these videos. My goal is to help Finxters be on the right side of change. We should stop everything. Like I stopped writing blog articles or stuff, right? Stop doing everything and think and do things differently, because everything will change. Everything you can imagine will change. Your work will be, your labor you're currently doing will get disrupted by these exponential trends. It will break everything, and it will break you if you don't adapt. So it is like, as humans, we need to adapt or die. This is just reality. It is not like a politically correct thing to say maybe, but it is the reality that will happen, and we need to adapt. And adapting means considering that we are just in the beginning, and don't leave comments like, oh, it's not sustainable, it's overhyped and bullshit like this. It's not overhyped in any way. We are in the beginning of this trend. AIs won't get dumber. AIs get only smarter, and in every single task you're doing today, playing soccer, really every task you're doing today will get done better by an AI in a couple of years or even a decade or so. Maybe it is already being done better, right? It can already write blog contents, for instance, better than many humans. It can code better than most humans. So the human baseline is already below AI for many tasks. And society needs some time to adapt, but it will adapt, because the smart entrepreneurs are already building AI systems and are already outperforming the dumb entrepreneurs, the dumb business owners that don't use AIs. And we also see some side effects of not being able to understand exponentials. In the number of years, experts predict that general artificial intelligence systems will get launched. Here we see on the x-axis we see the years, the year we have captured the prediction, and on the y-axis we see the number of years we will see AI. So in the year 2019, experts predicted AGI is 50 years away. But then OpenAI announced GPT-3, and experts quickly adapted their predictions, so that in 2021, experts predicted 34 years for AGI to come. This is only a year later or so, but we already have reduced our prediction of the arrival of AGI by 16 years. From 2070 to 2050 or so, right? And then Google demonstrates some conversational agents like Lambda 2, and the prediction reduced again by 17 years. And now the prediction, with launch of GPT-4, was only 17 years until the arrival of AGI systems. But now, in the year 2023 or so, where this was captured, actually experts predicted the arrival of AGI in only 8 years. And if they are right now, if the forecast is well tuned, we will see arrival of AGI in 2030. But we might see it much faster in 2026, right? Because if the forecasting error continues, if we continue this line here, we might see AGI in 2026. So we need to consider collective intelligence here that is trying to tell us something. And I think it's a nice chart by ARK Invest that really shows there's a significant probability, and this is all we need, right, to stop for a moment and think about our value proposition in the world and our positioning to benefit from the changes that will certainly happen now. So, accelerating productivity growth. AI has already boosted productivity significantly. So here we see the productivity of developers using Copilot and not using Copilot. It has like 220x. So there's significant value proposition for AI already. Just for those people who don't believe in the virtues of AI, we can already measure how productivity of developers increases. And as productivity of developers increase, our human productivity increases as well. Our research productivity increases. I recently did a video on testing ChatGPT 4.0 on my dissertation, and it understood the details of my dissertation better than I do now after 5 years or so. I could ask it questions about my dissertation, and these questions I couldn't answer myself. And how much time it had to understand my dissertation? Seconds. And if you had asked me to have the same base level understanding of my dissertation, I would have to reread again. And I have written it, right? I would have to read it again, maybe study it a month or so, and then I might be better in understanding. Not even sure about that, but I mean, and this is like PhD level performance, right? So ChatGPT 4.0 has already in many cases PhD level performance, and if I was still in research, in a way I am, but I am not in academia research. If I was still in research, I would be all over AI. And I know many of my research friends are, and they accelerate their research progress with AI. But what does it mean if research itself accelerates, if the number of papers published, our discoveries actually increase? And I have found a good graphic here on this as well. Here, this graphic, the underlying trend is like Moore's law. You see on the x-axis here, we see the 2023 performance. This is our base 1x performance of AI training. But then we have Moore's law. This is like a predicted improvement of the performance due to the chips getting cheaper and stuff, right? We have a bit more computational now after a year or so. So we would expect maybe this gray bar of improvement. And this would already be exponential growth. But then on top of this, we have NVIDIA actually layering in its GPU innovations, right? So we have like Moore's law that mostly concerns CPUs, and NVIDIA's improvement mostly concerning GPUs and maybe also bandwidth optimizations was already like this gray and green bars, and this would be a completely mind-boggling exponential improvement. But then on top of this, we found algorithmic optimizations such as the chinchilla or other software optimizations that have actually increased our performance difference in 1 year by 5x. And performance is meant in performance per unit of cost. So we have seen in 1 year a 5x increase in performance, which was significantly larger than, say, the 5x or so we would have expected by NVIDIA and Moore's law, by the curve we have seen before. And this is really mind-boggling, right? This actually shows us that singularity might be near, that AGI might be coming faster than we all expect. And productivity is here. Productivity increases are here, so our economy will expand, and we will produce more. The GDP will rise as a result. We will see strong deflationary pressures because many goods will get cheaper. The main units that are relevant for production costs of goods are energy, which gets cheaper, not at an as fast rate, but also exponentially, and not exponentially. I was just thinking about. So it is improving with Wright's law for some energy sources such as solar energy. So for every cumulative doubling of solar energy deployments, we actually reduce the cost by, say, 20%, by a fixed percentage point. And you see like this if the cumulative doubling is actually fast, is actually say on an annual basis for some time, we could cumulatively double the deployed solar energy. We could find ourselves in a phase of exponential decrease of energy cost. But more importantly, we see an exponential decrease of intelligent labor cost. And this is the most relevant cost factor, right? Labor is like 50% of all costs or more is labor cost. And it goes into every product. So all products will get cheaper in a way. But then again, we have another exponential trend that works against this deflationary pressure, and this is inflation, debasement, right? So we have these two trends fighting against each other, and they are not canceling each other out, but they lead to significant volatility, because at times debasement is faster, at times exponential increase of technological disruptions is faster, and that's why we will see significant volatility. We will see a period of significant volatility, of significant debasement, because in order to get to the 2% inflation, we actually need to expand the number of monetary units. So we should not save in, say, US dollars. We should save in scarce and desirable assets. And we have discussed some in this video already, and we will discuss more later, not financial advice. And this one is also an effect that could happen very quickly. And I have felt this myself in my area of expertise, writing, right? I'm a researcher, I write articles and stuff, I write papers, I have written academia papers and in computer science. So I have written a lot in my life, and the cost of authoring written content was actually pretty stable during the last 130 years or so. And then, so inflation adjusted. And then suddenly it dropped by 3-4 orders of magnitude, so by 99.9% or so. And it keeps dropping. So the cost of producing quality content has now dropped significantly. And this is like, there's no smooth trend line going from here to here, right? Sometimes, as we have these exponential trends underlying our systems, we see a perceived stability, we feel safe, and then suddenly we are unsafe, and suddenly it becomes viable, the new technological invention. So there was already GPT building underneath, right? It was already building, but nobody actually invented the product yet. But it was possible, maybe it would have been possible already 5 years ago to gradually reduce the cost here. But nobody invented the product. But the exponential trend that was underway was the enabling force to release this product, this revolutionary product, LLMs and alien technology. And the cost suddenly dropped to near zero. So nobody hires writers anymore. Okay, so this is like, if you are a writer, then okay, bad news for you. And it was bad news for me, and you just need to like change and adapt. And I'm not also dependent on writing. I write just for fun. But if you are dependent on your job, even more so, you need to take this serious. And you need to position yourself on the right side of change. So okay, we have seen this one. Now here's another interesting view. The training cost continued to fall 75% per year, and now we have looked at exponential trends. We understand that now here we have a log plot, right? And we have a line in a log space. What does it mean? A line in log space doesn't mean exponential reduction of cost. It means polynomial reduction of costs with the cumulative number of computing hardware deployed or produced. But if we deploy computing hardware faster, then we can make it an exponential trend in time, right? If our cumulative number of computational units deployed doubles each year, then we can actually get a fixed percentage improvement of AI training hardware cost and AI software training costs using like neural network and others, right? So we can see an exponential. The exponential can be driven by a polynomial power law. And we see the polynomial here. This is like the underlying force, because if we deploy more units, we learn something from the deployment. We get more data, more experience, so we can optimize it and become more efficient. And by becoming more efficient, the cost per deployed unit reduces. But if we accelerate our deployment of more units, and we say double the new units every single year, then we would actually still see this line. And this line, we would see it in time because we double the number of units every single year. So we see the training cost by ARC, it is expected that they continue to fall by 75% per year. Which, like, imagine you have a worker, you are a business owner, and you pay your worker 100K in a year to do some value for you. But then the next year you only pay 25K. And then a year after you only pay, I don't know, so maybe 5K. And then it's like it keeps falling and your margin keeps increasing, but also other people will compete with you. And if you still pay your employee like 100K, but other people come and they hire your AI employees for 75% of the cost, 25% of your cost, then they will squeeze you out and you will die as a business. So all businesses will die that don't use AI. Will get disrupted externally by other businesses that use AI. And if you are a country, if you are a decision maker in a country and you don't use AI in your country will get disrupted. It doesn't matter. It is not like that nation-state boundaries are of any protection here. If you are like a continent, then your continent gets disrupted. It's just like somebody will use it, and the one using it will destroy everybody who is not using it. So we are all incentivized to use it, and it will get used, right? This is happening, and AGI is coming. Some people argue, okay, there are some data limits to the exponential growth, so we already see like limitations of the data we can use, and if we cannot use data, then of course we cannot keep training. And I mean, there is something to this argument, right? As I said, exponential trends are kind of fragile. They often cannot be sustained. They can never be sustained forever. But we might be just in the beginning of this exponential growth phase. And oftentimes we are. If you look at exponentials, even though it looks like we are already at the end, because it's already maximum so it's already always up to the right, and the rightmost point always looks very much up compared to the other points, right? If we zoom out and if we let the trend play out, we can often see the exponential growth reaches areas that we would not have expected before. And if the exponential trend can be sustained for some time, it is actually it will yield mind-boggling results and opportunities. And the question would be now, are we already reaching a data limit? And the answer is no. If we just use spoken language token, we can still have a 1000x in data. And spoken language gives us 1000x in data. So this is just 3 orders of magnitude, right? So we might be near the end, right? Even like 6 orders of magnitude in such a trend. So if you look at, what trend are we looking at? Maybe this one. 6 orders of magnitude here. Like from here, one tick is 5 orders of magnitude in this graphic by Ray Kurzweil, singularity is near. So we have 10 to the power of 10 to 10 to the power of 15 is 5 orders of magnitude. So even if we have like a 1000x, it would be only 3 orders of magnitude. So it would the spoken language would only get us like half a point or so, half a tick here on this chart up. So we might even need much more data in order to keep training our AI. So there might be some limitations, we don't really know. So there are we can be certain that there are some limitations eventually that that exponential growth will not be sustained forever. But we are still many orders of magnitude away. I think this is the most important takeaway for us, like in 2024. The most important takeaway is that we are still like 3, 4, 5, 6, 7, 8 orders of magnitude away, which means we will see a 1000 to 1 million x of capabilities and stuff, right, of data, of growth ahead. And this gives us some opportunities of significant wealth creation. If you look at the total addressable market of, say, AI, then we can see like a 34% to 54% compound annual growth rate for, say, the next decade or so. If you calculate this, 46% compound annual growth rate, it goes from 10K to 450K. So if you find any way of participating in this industry growth, just on average, maybe you have a, I don't know, indexing idea or so. Maybe you just invest half of it in Nvidia, half of it in Tesla and stuff, right? No investment advice or whatever. Maybe just take 10K and put it to work, right? And you could be financially free due to the disruption by just participating in the industry growth. Some companies will grow much faster, some will die in this industry, but like this is the industry growth rate that is expected in the next, say, 10 years or so. And this growth rate could yield significant, could be life-changing for you. And I think this is the only way we can protect ourselves against the disruption, because if you are a laborer, if you are a worker, if you depend on your salary, like it will be tough. And but we can protect ourselves by putting some of our salary to work here, right? And it doesn't need to be much. Like if you make 60K per year, you could easily like put 10K to work every single year, right? And then you could create 450K every single year in value in a decade or so. So it is possible. No investment advice once again, but it is. But I think this is kind of the only way for most of us to build a portfolio, to build some investments, because the economy is capital plus labor. Labor, intelligent labor, will get completely disrupted, and we see this. Think of this graphic. This is what happens to labor, to all kind of labor. And so we should not bet on labor, right? Maybe chill out a bit and think about ways how you can put your money to work, right? Put 10K there and think about ways to benefit from this disruption we are seeing and benefit from this compound annual growth rate of the industry. There are many ways. I mean, if you're open-minded, you will find ways. And it is also possible. I have seen this level of compound annual growth rate in my own net worth in the last 10 years. So it is possible. I know it is because I have experienced it. Yeah, thanks for listening. If you like this, then give me a like, subscribe to the Finxter channel. If you want to be on the right side of change, do the same. You can also join my free email list where I keep you updated for free. We have 160K subscribers. I recently removed like 20K or so of the most inactive subscribers. So now we have a strong group of 140K, very active tech enthusiasts on the email list. It's free. Check it out. Also check out our paid program, the academy.finxter.com. This is how we keep the lights on at Finxter, and this is also how Finxters can basically benefit, how can still use their labor to create exponential value. And I know about exponentials, as I have demonstrated in this video, to exponentially increase their value proposition to the marketplace in order to be able to mine more capital to put to work in this exponential growth trajectory. Thanks for listening, and see you in the next video. Bye.